Welcome, everyone. It's Angelo Robles, host of the Angelo Robles podcast. We're Family Office on YouTube, and I'm the founder at Family Office Association. Really excited. It's been about a year, so we're late in the year here in 2021, and the return of Raoul Pal, who also just came back from Vegas. We'll catch up on the amazing conference that he hosted there, multiple thought leaders, and we'll get some of the key takeaways. We're calling this Raoul Pal on investing in crypto assets. Nothing fancy, just a simple title because it gets right to the point. A little bit about Raoul. He's a global macro investor, co-founder of Real Vision, a traveler, and probably my favorite moniker, rum drinker. I'm going to have to add something like that for me, but there's several alcohols that may fit the bill. I'll have to narrow down. To give you a little bit of context, Raoul is a former hedge fund manager who retired at 36. He's the co-founder, as noted, of Real Vision, a financial media company offering in-depth video interviews and research publications from the world's best investors. And I'm a big fan, and I highly recommend it. He has run a successful global macro hedge fund, as well as co-managed Goldman Sachs's hedge fund sales business in equities and equity derivatives in Europe, and helped design the BBC TV program Million Dollar Traders, training participants in investment and risk management strategy. Raoul, welcome back to the show.
Good to be here.
Well, thank you. Earlier this week, I had on someone you know, I had on Robert Breedlove. And I mentioned to him how I loved the multi-hour interview that you did about your investment thinking process and big picture macro. Like, you went back like hundreds of years. So while I have you on now, I want to thank you for that amazing interview. I love you guys. I really enjoyed it. And I highly recommend to my audience now, if you have not watched it, and I'm going to go in a different direction in this interview or it's going to be repetitive. We'll cover some of those topics, but for the most part, you have to watch it. I think it's really important. One of the things I will bring up from the interview, and I've been talking about this for years, usually it gets me in trouble, is demographics. And you're huge on that and much more thoughtful than me. From my perspective, it's inevitable. Millennials and Gen Z are massive generations. They're even bigger in places like India and Indonesia and the Middle East, making up a larger percentage of the population. And at least here in the US, there generally are things they believe in that are different than a lot of older generations. Their distrust of big government, of government in general, of companies, of corporations. There's really a lot here, but my big picture is there's more have-nots than there are haves. And their votes count equally the same, yet there's more of them. Now let's ignore the electoral political system for presidential votes here in the US for a second. What I'm getting to is they're going to basically decide the politicians that are going to be in office. And a lot of them may have beliefs and philosophies that are progressive on certain issues, arguably taxes and maybe taxing unrealized capital gains that may be challenging for those that are more historically traditional and successful investors.
Yeah, I think that these people look at the world in a different way. They got dealt a different set of cards, and the set of cards they were dealt with was they came out of university record in debt with an unaffordable housing market. There was so many of them that competition for jobs was tough, and most of them graduated between 2000 and 2008. So their opportunity set has been very different. And so they want a slightly different version of the world than their parents gave them, which was the baby boomers. And I think that's understandable. The baby boomers themselves were reacting against the world that their parents had, which was 2 world wars. So, we are a function of demographics. We always will be. We're a function of our parents and how we grew up.
Oh, that's, just so true. In terms of what you're describing, they look at the amazing amount of college debt that they're taking on, and they're looking at bailouts that they saw in 2008 in other years recently from airlines to big companies, and it's going to leave them, they're not happy. That's going to cause the rise of an AOC here in the US and others that I've been saying for years, as I talk to family offices about sovereign risk, that it's inevitable that we're going to have a president, probably sooner rather than later, and right or wrong, that's your decision to make politically, that is going to look a lot more like that than the average, I'll go with a US senator, average white male who's 65 years old.
Well,
Things are
the
changing.
point being is, look, what happens is humans struggle to find an answer, a better answer, and this system failed them. So why would they not look for something else? So whatever anybody wants to argue, trickle down economics, or how the Democrats have operated, they've all failed everybody. So of course people want to look for very different answers. Now, in some countries that leads to warfare, that leads to extreme right. Other countries it leads to extreme left. Progressive in the US mantle is basically European liberal. It's not that extreme. So who knows where it's going to lead to, but I think it's a different world.
Leading to demographics and what we're building up as a bit of a foundation, the advancements of AI and technologies, and effectively the future of jobs. So I'm looking at, like you said, they're coming out of college, they're in massive debt, they're concerned about the future from a family traditional nuclear unit that they feel completely different about than their parents did. And they're looking at, in 10 years, am I going to have a job?
Yes. And they're already in the labor force with their parents, which is pretty unheard of, because their parents are retiring later. Yes, the labor force participation rate is falling. Retirees are starting to come out of the labor force. But we've got an issue that they're competing in a globalized world for work with their parents too, against the rise of the machines. I mean, that's a pretty ugly setup. And so they're going to have to look for different answers, because wages in real terms have not basically gone up in the last 50 years because of this demographic issue. Too many people in the labor force and too globalized, plus technology.
It's inevitable to me. I think there's no way around it, kind of tying this all together. We are eventually, and I don't mean 50 years, probably within 10 years, going to have some variation of universal base income, or there'll be just a rise of the masses that are in a very tough situation. And what I said earlier, politically, I could see government supporting food, shelter, and transportation, energy. I mean, I think it's inevitable.
Yes, it could be inevitable, but it could be solved by the private sector, which is the thought process I've had about, and we'll get into crypto more later, but about tokenization, where we can earn universal basic equity and universal basic income by doing other things. So look, there is a potential we can solve it. It's probably going to be a combination of the two. But in the end, yes, you can't just, I mean, I grew up in England in the 70s and 80s, and over one period of time when Margaret Thatcher came in power, she broke the unions, and we destroyed the coal industry, the shipbuilding industry, the car building industry, all at the same time. Those people never came back into the workforce again. And we replaced them with service jobs. And so with technology advancing as fast as it is, I mean, software is eating the world, and it's going to eat every job. It's going up the food chain. Lawyers, consultants, accountants, everybody is feeling the pressure of this. And so you're going to have to, at a societal level, address it at some point, is how do you stop people just holding out the whole world?
Oh, for sure. Those are major issues. And maybe tying it a little bit into the investment picture, then we'll get to crypto. You have a quote that is one of my favorites. I kind of borrowed it, gave you credit, and put it in a PowerPoint of mine. I'm going to read it. These new investors aren't interested in your love of oil or commodities or 1950s V8s, your contemporary art of the 90s, and your Jeff Koons is just a stupid balloon structure to them. It's not their cultural reference. JPEGs and memes are. This is all about culture. They value different things than you and I. And like we discussed, there are simply more of them. And that ratio in other parts of the world, some that I mentioned, is even higher. This is inevitable. Now I'd like to tie it into investing in crypto, but I know many, those over 50 that have family offices that are billionaires, and most of them, I don't know, maybe they're not listening to you and me and others enough. Their head is still in the sand. They don't get it.
Because people anchor themselves on the past, and they anchor themselves on what they want, not what is. And they want the nostalgia. They want when their lives seem simpler. Now, it was never that case. Lives have never been simple. They've always been complicated, but that's what we tend to do. And the baby boom generation has a propensity to look back at the 1950s, when every house got a new washing machine and a car, as a simpler time that we could go back to. We can't. And it's never going to happen, because the balance of power is changing to a younger demographic. And I think, that's what you're alluding to. And that changes everything.
Is everything that many people have learned about investing, at least as it applies to digital assets, being flipped? What we learned in college, what we learned on quote unquote Wall Street, what you learned in the traditional way as well, our prior knowledge and how we make decisions might actually be a negative in some of the things that we're talking about. How do we don't anchor? How do we don't confirmation bias? How do we learn new things?
Look, we need to leave our skepticism behind, and we need to stop thinking of the world as we wish it to be. So how can memes be an investment class? This is ridiculous, you and I would say. But it is. Why? Because these kids grew up on the internet and they have value to them. They will remember memes like we remembered pop songs of our youth. So they are valuable. And so things that make people that are perceived as fun, like investing in something like Doge, they know that it's not a serious investment class, but they don't care because it's cultural. They're investing in culture because they grew up on culture online, and culture online was where they hung out on, Instagram, Facebook originally, TikTok now, Snapchat, all of these things. And it's just a very digital world. So digital goods have value to them. Well, we all think that we need to touch something, we're anchored in gold being the thing that has value. Gold means nothing to them. It's absolutely irrelevant to them.
I mean, how true? I mean, you mentioned memes. I heard flack last year when I said single family offices should hire a digital asset expert internally. Now, I think they need more than one, and they probably can't afford them, because you have certain rules and regulations in your SFO, whether it be dress or other policies, that are not going to be as attractive to someone under 30. And I know I'm going to go with hundreds of talented cyberpunks, let's go with that, under 30. And I'm not saying this is going to last forever, that have made 7 figures. You're not going to be able to afford them. They want the freedoms that they want. Now, you might be able, and I mentioned to one family, you should have someone dedicated to memes and crypto, and they laughed at me. And then they saw the rise of Shiba Inu, Safe Moon, and others that have been around. That was the most successful, at least at the top level of the top 5 or 10, the most successful sub-asset class in crypto in the last 12 months. And because you laughed at it, you sneered at it, and I guess I did a little too, not anymore, like you missed out on massive potential gains.
Yeah. And NFTs, it's huge. Yeah. Now, you're right. The problem is none of these kids want to work for like a family office structure. What they will do is they will work 4 jobs doing different things and be involved in different projects. And you could get them to freelance to help run a pool of money for you, but you certainly won't get them to come into an office. I mean, forget it. Those days are dead. Everybody I know in the space, in the crypto space, is doing 3 or 4 things at the same time, as am I. And it's fun because it's exciting.
Yes.
And you kind of know that you're seeing the world in a different way than everybody else, and the world will catch up over time. And so you want to be as fast as you can.
You also had a great statement. You have many, Raoul. Kudos. You mentioned the risk reward potential of crypto and digital assets is just too good to ignore. Now, are other things like certain stocks and assets interesting? Yeah, I may get 8%, 10%, 15%. If I really choose well, I may occasionally get 20% or more. But relative to the risk return in crypto and digital, short term, it's volatile. But looking at it maybe 3 or 10 years out, if you're not in it as an investor or an SFO, you are going to be left in the dust. Maybe I'm wrong.
This is the fastest adoption of any technology in all human history. The internet, with 150 million users in 1997, was growing at 63% a year. Crypto, with 150 million users, is growing at 113% a year. So we go, because it's an exponential trend, we go from 150 million users to 1 billion users by 2024. That's how fast this is growing. Currently, it's a $2.5 trillion market cap. If we look at how fast tokenization is eating into other assets and growing itself, and we look at those adoption numbers, then the reality is all of the other asset classes, global equities, global bonds, global real estate, are all between 200 and 350 trillion, with the derivative market being 1 quadrillion and FX even bigger. So the thought process is that therefore, if crypto goes to 250 trillion, which sounds about right, and it's
100x in 10 years
of an entire asset class, we've never seen anything like that. Mankind has never seen a larger wealth creation opportunity in a shorter period of time in all of history. Even oil didn't happen as fast as that because there wasn't enough uses for it. This, because it's digital and built on top of the internet, means you've kind of got Metcalfe's law on top of Metcalfe's law. So the exponentiality of the returns is simply gigantic. Now, let's say Raoul's an idiot and it all goes to zero. So the downside is, let's say I'm going to use Ethereum and let's call it 4,000. So we lose 4,000, but if it goes 100x up, you would take that risk reward forever. Now, it's not going to zero. Is it going to go down 50% to 2,000? Let's say that's the risk. So it's 50% downside, 100x upside. Okay, that's a 200 times risk reward. You know, this is why nobody cares about most of the macro stuff anymore, because we all saw the rise of the other Metcalfe's law business models like Amazon, Google, Facebook, Apple, even Tesla. And we're seeing this again, but in an entire asset class of which we can participate this time as both participants in the networks and owners of the networks. And it's available to everybody.
Yes. I mean, I'm basically 100% on board. I spoke also about over 10 years, looking at 100x being very possible. And you get laughed at, you get snickered, like that's unrealistic. And I don't know, maybe it goes up 2x in 10 years, maybe 50x, maybe 200x. But if you look at the growth curve, like what you mentioned, and Metcalfe's law, I think you could put 2 and 2 together and make the argument for a portfolio of crypto and digital that could do very, very well, better than any other asset class you'll ever invest in. But you have to change your paradigm of what you're used to. Maybe start off small. I started off small.
The whole point is, if I'm right, and let's say you're a cynic and you put in 1% and I'm right, you can still make 100%. Right? You can double your net worth with a 1% allocation. So you can be a cynic and take the bet, or you can be like me and put, you know, a large part of your liquid net worth into it because you really want to capitalize on it. Fine. You take your journey, you take your risk profile. That's all good. But to not have it makes no sense whatsoever. Again, you might not like it. You may not agree with it, but nobody cares what you think. The market is what matters, and the adoption effect. Again, you know, people become emotional about assets. You shouldn't get emotional. You should look at the cold hard facts of it.
Oh, for sure. I mean, I've been talking to my member families, which are pretty significant. And I mentioned to them, I'm probably one of the most active, I'm not the largest, but among the most active investors in the community that you'll ever know, like use me. And I would say even now, when I talk about it so much, maybe I'll get one call every 2 months. I mean, it's so that actually shows me the potential. That shows me billionaires and others have not totally jumped on board yet. And we're going to talk about them in institutions shortly. My big picture question for you is, I had you on a year ago and you said most of your liquid net worth was in Bitcoin. I follow you very closely. I know that has completely changed in the last couple of months. If you could describe to my audience how you reposition your portfolio and why.
Yeah, the shock, there's no shock that I sold out. I haven't sold out. I've kept adding all the way through. I just switched my portfolio towards Ethereum and now almost entirely sold out of my Bitcoin and invested more in Ethereum and then a bunch of other tokens as well. And that was based on an understanding of network effects and how many people were joining the Ethereum network and the number of applications being built on it, which is basically what drives Metcalfe's law, the value of the network. Also, I noticed that the community within Bitcoin was a little too overly tribal, and that was forcing people out of the community. So we've got one community that's shedding members because it's not welcoming, another community that's very welcoming, that's growing extremely fast. And, you know, I'm a macro guy at heart, so I just look at the chart of ETH versus Bitcoin and it was going to break out. So I just moved all my eggs into a different basket.
Well, and
you know, if I'm looking at it right now on my Bloomberg screen, ETH's up 430% this year and Bitcoin's up 65. So it kind of worked.
And I believe, let me know if I'm wrong, aren't you even levered in Ethereum?
Yeah, I own calls. I've got some calls in December that's probably going to expire worthless. And I've got calls out in March. So I don't use leverage in a traditional sense of, you know, where I can lose my position. I bought call options because then it's premium and I can write it off and I don't care.
I completely agree with you. We all start off in Bitcoin, and there is an element of what's called Bitcoin maximalist. I'm not going to include Breedlove in there. He's somewhat more open-minded and more of a freedom maximalist. But even he basically said, Angelo, you're so complex doing all this research and investing in 40 different crypto and tokens. You know, might you get those same returns by simplifying your life and being in Bitcoin? And you know what? You might be right, Robert. At the end of 10 years, maybe I complicated things more than I needed to. But if I look at the metrics and mathematics of Bitcoin, I'm sorry, I just don't see it going up 50 or 100x over the next 10 years. I like it. I think it's going to do well. But my thesis is I like other things better that are going to make me more money, maybe with a little bit more risk.
Yeah, and I'm with that too. And there is a probability that the Bitcoin maximalists are right and Bitcoin becomes the base layer money of the world. Is it possible? It's possible. Is it probable? Much less so.
And just to reiterate, when you say your liquid net worth, you're not just saying my cash positions. You literally mean you practically have no stocks, no bonds, no commodities. It's practically all in Ethereum and crypto broadly.
I have basically enough in the bank account to pay my bills. Every single other penny is in this. Sure, I've got shares in Real Vision and all that other stuff, but that's not liquid net worth. You know, that's all private stuff, and I've got houses and stuff. But this is every single penny.
Are you a believer of the adage you get rich by focusing on a limited number of things and get very concentrated?
I'm a macro guy. That's all we do. We don't run diversified portfolios. Macro guys look for the optimum time to take the maximum risk and leverage that.
You recently spoke, I think just a day or two ago on Twitter, relative to the current incredible volatility in crypto and digital. And I get it. It's not fun to wake up one morning and things are down 15 or 20%. But a lot of people, of course, Murphy's Law, they get involved in crypto and it goes down and they get afraid and they get out. They're not showing diamond hands at all. How could they get over that fear?
So do what I do. It sounds ridiculous, but it works really well. You put the money in, you know your overall risk, what you're prepared to lose. Let's say it's down 50%. That's a reasonable estimate of what you should be not concerned. We had a 50% drawdown this year. So you say, well, 50%, maybe even 60%, maybe 70%, whatever the ridiculous number is. And then you don't look at your P&L. You can allow yourself to look at the P&L at all-time highs, just so you can just smile to yourself. You don't look at it. You can look at the market. I mean, I've got the charts up. I've even got the bloody hourly chart up. I don't trade hourly. I don't trade my position at all, but I look at it because I like to kind of follow the structure of the markets. So I match my investment horizon with my time horizon of the trade, and I satisfy the adrenaline buzz by messing around looking at short-term charts. I don't trade at all.
Let's mention some names. A question came in. Basically, the average family office has about 1% in crypto. Yeah, very misleading. A lot have zero and a lot have 3 to 10%, but let's broadly go with that. And the person's mentioning names going back in your day and here in Connecticut that I would know. We're friends with Dan Tapiero. We talk about people like Paul Tudor Jones. There's others, but there also is, I don't always like that argument because there's prominent people like John Paulson, like Paul Singer, like Paul Krugman. And here's what I say to them. If you listened to them, first of all, if you listened to Krugman 20 years ago, the internet was garbage. But if you listen to any of the people that I said, who are older people, no offense, that are not what I would call exactly tech savvy, then you would have missed out on the greatest 10-year return of all time in Bitcoin in the last 10 years. That's the advice you got from them and Peter Schiff, and Peter's a friend of mine.
Yeah, and because they're mean reversionists. They believe in a mean reverting world, but technology is exponential and they've never got their heads around it. It took me a while too, because, you know, we're macro guys, people like myself and Dan Tapiero, so we will look at the business cycle and assume that, you know, assets kind of recorrect, but this trade is a different trade to all of that. We're trading an exponential trend, and being a mean reversionist in an exponential trend is the way to the poorhouse. That's why nobody got Amazon. That's why nobody got Amazon. Most people didn't get Apple. Some did because it was quite consumer facing. And almost everybody tried fading the NASDAQ over time and failing. So I just think people just don't understand technology. Humans are linear thinkers and mean reversionists by nature.
And many of you that are earlier on and took a while to get into Bitcoin, I kept on hearing no intrinsic value, no intrinsic value. That's not theoretically true, but my big picture is going to be, why do you give a shit? Like, what is intrinsic value? What's the intrinsic value of gold? Okay, I guess it could be used for a tooth filling, but its value as a store of value is simply because I believed it so and you did, therefore let's have gold. But that argument loses some steam. Like, you're so focused on Bitcoin, you do understand that layer ones like Solana, like Ethereum, like Terra Luna, they're so-called doing real shit. They got DeFi projects, they got NFTs being dropped, they have developers really aggressively developing on it. Like, and I tell them, they have intrinsic value as your old-fashioned way of countering intrinsic value is.
So again, people are linear. They look at the world as is today, and they can't look forwards. Why would I invest in, let's say, Apple when they brought out the iPod? Well, there's two ways of looking at that. I'm not going to use an iPod, and therefore, well, I don't see the value right now. I've got a record collection, or I've got a bunch of CDs, right? I don't need that. It's fine. I love my stereo at home. Or the person looked at it and said, holy shit, this is the future of digitizing all music, putting it on a small device, and that leads to the mobile phone, and that leads to computing power of huge scale in your pocket, which leads to the entire mobile revolution, that leads to the entire app development, right? That is the difference in linear thinking. So people are saying, well, where's the big consumer app? Well, guess what? By the time the huge big consumer apps are out, most of the value's been captured already. You're always going to be too late. It's like people are doing it with Tesla. It's hilarious. They don't understand that what you're trying to do in these growth style opportunities is look 10 years out, not this year's earnings or this year's application. And people just struggle with this.
Yeah, that worked really well for the anti-Tesla people over the last 10 years. I'm not saying they may not be right moving forward, but they really missed out on that one for the reasons that you noted. I think the audience is going to have some framework of understanding Bitcoin, and Ethereum is going to be the second one they're going to be most familiar with. But if you could talk a little bit about, there's other what's called layer ones. There's Terra Luna that I think is amazing technology. There's Avalanche, there's Solana that has blown up this past year, and there's others. Now, maybe my challenge, I'm jealous of you being more concentrating in levered for the most part in Ethereum. I'm active in over 40 different of them, including the ones that I noted. I just don't know who the winners are going to be. And maybe I'm being duplicative. I don't know.
No, it's really simple. What I did to solve that same problem was just buy an equally weighted basket of.
Yes.
So I just put, it's like, 80% Ethereum now and 20% in an equally weighted basket. Guess what? My second biggest holding right now is Sandbox, which is a
Oh, I love it.
Metaverse token, because it went up 20x in a month and a half. And you don't know what's going to move. You know these layer ones are doing well. Just own a basket of them. And that whole game is about, okay, Ethereum is overly popular, so it's becoming expensive to use. So these ones trade off decentralization for speed and price. So, and that's fine.
Oh, for sure. And that brings up another question. Traditionally, when things go out of the perception of your investment policy statement per allocation, oh, this has grown too much, I have to sell and reposition my portfolio. That doesn't really work in crypto and digital. You got to let shit run.
This is really important. You're playing an exponential trend, not a mean reverting trend. You're right. Crazy to rebalance. You might periodically, because you want the cash, to take top slice profits.
I agree.
Really, you need to hold the position because your view is a 10-year view. So don't trade on a 1-year basis or a quarterly basis, because then your trade horizon doesn't match your time horizon, which was the basic thing that Paul Tudor Jones taught me, is the best people in the world, trade horizon matches their time horizon.
Let's talk a little bit about NFTs. I'm assuming we both became somewhat interested over the last year to year and a half. And again, I follow your work. And I agree with something you said, I think back in the spring, is that perhaps I wish I got involved a little bit earlier. I'm pretty fluid on it. I know how to use Rarible and OpenSeas. I know that it's way more than digital art. And maybe because of the complexity of MetaMask and intertwining with OpenSea, all that's getting better, then Coinbase is going to come on board. Have you pulled the trigger on NFTs yourself yet?
Not really. There's a couple of projects. There's these kind of apes with guns that somebody from the Real Vision community, the Real Vision bot, has put together, and they're actually building a community around it. So I participated in that because I thought it was interesting, because what they did was built these NFT images around the sentiment of Real Vision interviews that day. So they scrape the transcripts with AI. They say the predominant sentiments are these, and then they create this narrative around the character, and the color and what it looks like is based on that. And so I thought, well, I want to see where it goes. I want to see what happens to the community. So I own a couple of NFTs. I've not got in. I mean, I miss Bored Ape Yacht Club. A friend of mine told me to buy it at, it was CryptoPunks, actually. A friend told me to buy them at 30,000. And I don't know, they're trading in the millions now. I missed it. Not that I didn't get it, is that I didn't see the value for me. I didn't feel part of that community. So
yeah, that's very much a strong cultural bond. I mean, that maybe goes back a little bit to what I said about Bitcoin and the early people saying it has no intrinsic value. I don't get it. And whenever I bring up NFTs, they know the term. They only think of digital art, not all else that NFTs could be a part of, but they even poo-poo the digital art. Well, it's just a JPEG on your phone. Well, I could buy a replica of the Mona Lisa. It looks great. I could buy a beautiful frame and hang it on my wall, and it looks good. It has zero value. This is digital scarcity. It's attestation on the blockchain that there's a certain limited number, and I have one of them. But let's even ignore the digital art, which I think is huge. I think people are really underestimating the grave potential from tokenization using NFTs, how it really ties together Web3 and blockchain. And I don't know, things like driver's license, passports, real estate deeds, like lots of things. Membership organizations like mine are probably, and kind of what you do, are probably inevitably going to have a transition to whatever, founder shares, NFTs, platinum shares, gold shares. And there's various different access points that you get from verifying that you're an NFT holder.
NFTs, what are they? Non-fungible tokens. What does that mean? It's a stupid name. Nobody understands it. What it basically means is it's a single thing that is unique that is recorded on the blockchain. That can be a ticket for a concert because it's got a ticket number that's specific for one person. It can be a piece of art. It can be an insurance contract. It can be a membership. It can be all sorts of things. And that's what's very interesting about it. Now, it doesn't have to be one specific, and can be multiple specific things, but it's non-scalable. You can't just keep creating them in certain ways. So the use cases for even global real estate and tokenization of all assets hasn't been seen yet. You know, this technology, when we talk about tokenization, we're basically talking about NFTs. But we've just seen the first consumer manifestation, which is based around art, community, and meme culture, essentially. You know, Bored Ape Yacht Club is an extension of meme culture, which is community, which means we're like-minded. We perceive value of being part of that community. I want to pay, much like we might pay to be a member of a club. It's no different.
Traditionally, someone would look at a stock portfolio and look at international, US, large cap, small cap. I guess we're starting to do that in our crypto and digital asset portfolio. Maybe the blue chip is Bitcoin, Ethereum, Solana, et cetera. But I'm assuming, and I know that you've also looked at from, I'm assuming, the metaverse, memes, GameFi, even not safe for work tokens, and the opportunities that are more risky. I get it, but their exponential return profile is probably even greater than a lot of the larger, Bitcoin and layer ones.
Anybody who's been in financial markets knows that there is something called a risk curve. And the risk curve is you start with the safest asset. So in the bond market, it's really simple. It's the US T-bill is the least risky of all. Then you move out to the 30-year. Then you move out to corporate bonds. Then you move out to junk bonds. And then you go to private sector lending or distressed. And what you've got is a return profile that at the right point in the cycle, you need to be taking risk. And at the right point in the cycle, you need to not be taking risk. Crypto works identically. We're humans. We operate in exactly the same way in every market. Same with equities. When you push out to emerging markets, then frontier markets, all of this stuff. So it's just a function of that. And yes, own some of the tail, own some of the new technology that may not be in play right now. I own some social token plays, some metaverse plays. The metaverse plays just pumped recently where they did nothing for a year, but I kept them there because they went up and down. I didn't really look at them because I didn't care, because I wanted exposure to that part of the risk curve too.
Well, that leads me to my next question. So speaking of the metaverse and all the potential I see in there, I mean, my God, I changed my Instagram handle from my company name to Angelo Robles Meta. So that shows my belief in the metaverse. I'm looking at parts of my portfolio in the metaverse. Let's compare notes. You mentioned a sandbox, and I've interviewed the co-founder, Sebastian. I'm glad I got involved. I think that's my third best performer this year. Decentralized, Cube, I could argue Arweave, Wilder World. Those are some that I'm involved in. If we want to get a little deeper, a lot of people are like, well, I don't see that on Coinbase or FTX. Yeah, if you want to be a little bit of a degen, you have to learn. I'm old and I learned how to use something like MetaMask, how to use swaps. They're not that hard. They've gotten easier. YouTube could even show you how to do it. And that's how I got some of the more, let's call it esoteric plays that are still too small, at least in the US, to be on a lot of the traditional US exchanges.
Anything that's a little bit harder to do filters out 90% of the participants. And if you're right, and it's harder to do, you'll make all the returns. Doesn't mean that you're guaranteed returns, but making it hard means that you tend to be earlier than others.
Besides the sandbox, what other plays do you like in the metaverse?
I only own Sandbox and Decentralized. Do I own? I'm trying to think. Those are the two main ones.
Let's move on to something that we're completely on the same page with. And I think we both said that we're probably too damn early. I probably have too much of an allocation towards several plays and social tokens. And I'm not going to get out of it. I'm in, I'm really deep in. And when I look at what could I get over 50 or 100x in 3 to 5 years, it might be social tokens, Rally, which you could get here in the US on Coinbase, friends with benefits that you probably have to learn how to use MetaMask in some of the browsers, chills on kind of a sports play. I kind of know the answer, but what do you think of the potential of social tokens?
Social tokens are a way to organize complex adaptive societies, i.e. big communities. And it creates a reward system and incentivization to drive network growth by being a good community member and creating value to the community. The behavioral economics of a social token is extraordinarily powerful. And we are going to see this at scale across sports, music, guilds, skills. There's so many different use cases that we're going to see this come into. And it is early because NFTs is the first unlock. Bored Ape Yacht Clubs. That's basically a social token for Bored Ape Yacht Club owners. Bitcoin is essentially a social token for people who have the beliefs in Bitcoin. People don't like to say that, but that's really what these things are. And then what happens with the social token? Can you build an economy on top of it? Ethereum would be another one. So they are utility tokens in that respect. They're composable, which means you can build stuff on top of it, but they have a value for your community. And if your community is vibrant and growing, the value of those social tokens can go up. And it's a very, very attractive way to build a layer of value above equity that doesn't exist. So if you think of it in terms of brand, you're seeing Nike right now and Adidas moving into the NFT space. What is that all about? This is about brand on a balance sheet right now is an intangible. Once you digitize brand, it becomes a tangible. And that's what these tokens do.
And everyone, we have ballpark about half an hour left with Rail. Yeah, I got a million questions, including on stable coins, on DeFi and DAOs. I'm going to save those for a different time and stay a little bit more thematic with some both bigger picture macro, but as well as some deeper dives into specific names and activities in crypto. In the monetary economy, money is considered a store of value where it can be used as a means of saving and allocating capital. Why is Bitcoin a better store of value than Bored Ape Yacht Clubs, than baseball cards, than Rolex watches, than Sandbox? I don't think it necessarily is.
It depends whether you mean store of value, transmission system. We're breaking down what money is into component parts right now. So as a store of value, it is robust beyond which anything else is in the space. But does that mean that it has to go up the most? No, it could end up being the most stable. And that creates a store of value. If you debase fiat currency, it just goes up versus fiat currency. So it's not really clear what even people mean by that. Because, is a Picasso better store of value than something else? No, it's gone up because there's been more demand over that period of time. So it's a complex thing. And all of these tokens have different attributes of moneyness, and not all of them are money itself.
Raoul, what's your take on the Bitcoin bonds in El Salvador?
It's kind of Bitcoin as collateral for bonds. It's interesting. And we will see more developments of a Bitcoin yield curve. We're already seeing it elsewhere in the DeFi markets. So those things are coming. But, it really is a loan against collateral, which is, we do it against all sorts of things.
Maybe more of a cyberpunk question. We could always move on from it. But did the candy machine, which involves within the NFT, clog Solana? And then Solana also has had the issues with the DDoS attack. Yeah, we could argue centralized, decentralized, but is there any concern there?
Well, this is the risks of going onto a different protocol. Ethereum has been road tested a lot more, and it's had its problems in the past. So Solana's had its problem, not unusual. Bitcoin's had its problems. not unusual. So you take more risk because it's an earlier protocol. It hasn't gone through all the full Lindy effects yet, so you don't know.
Yeah.
And that's fine. And that's why it performs better in a bull market and will probably perform worse in a bear market.
This one is really out of the blue, and it has massive amounts of money behind it. It has sucked this year, but it's intriguing. Is ICP the next Solana?
That's an interesting question because everybody hates it because the VCs got in really early. It was suddenly worth a huge amount of money. The coin sank 95%. But I think it's interesting. I think it's potentially something for the next cycle because there's a lot of smart people working on that. There's a lot of development taking place.
Yes.
There's not a huge network effect yet of distribution of the tokens. So it's not provable yet. But like you, I'm just asking the open question, could this be?
Yeah, that's a question that I'm asking. I know that I'm early in social tokens. I know that I'm probably pretty early in ICP. Now here in the US, DeSo is available on Coinbase. And I have my doubts about it, but I think it's a very intriguing what they're doing. So I said, WTF, why not? I put a little bit into it. Any opinion on DeSo?
No opinion. Don't even know what it is.
Oh, okay. It's the challenges that we have on networks like Facebook, like Instagram, which they own, Twitter, is we could be canceled at any time, Raoul. I mean, you're going to close in on 1 million followers probably in a couple of months on Twitter, and Twitter could pull that from you like that. Both the clout it gives you and the revenue, where something like DeSo basically takes those kind of platforms and makes them so-called completely decentralized. You could say what the hell you want to say, and you're not going to be censored.
Problem is the network effects of Twitter is far too big for people to move networks. So if you think of the new network, let's say the biggest network we've seen in recent times is TikTok. How did that work? Well, because they're a different age group. So I think it's really hard for people to move networks. I still check into my Facebook account every couple of weeks because there's some
that
friends.
Much?
Yeah, I want to see some friends because I don't use Instagram because I didn't want to get overwhelmed. I use Twitter actively. I haven't got time to use Discord. And so I don't think we're just going to magically migrate to this new social network unless it is entirely revolutionary in what it offers us outside of just our own digital identity.
Yeah, that's true. Those are good points. I like the concept of DeSo, that I have more control, quote unquote, of my brand in those kind of mediums. But like you said, there's such power of network effect in them. Now, that could be a bigger question relative to Facebook changing the meta and who's going to be the winner in the metaverse. Is it going to be more centralized? Is it going to be less centralized? Why don't we save that one for a different day? I forgot if it was you who said this, but I'm looking at some of my notes. Best decisions of the year, backing Axie and getting into Olympus early back in February. Yeah, if you want to be really concentrated and you made the right calls like Axie Infinity at the right time, you crushed it way more than if you put it into Bitcoin, Ethereum, and many others.
Yeah, I didn't get either of those two. And the point being is that's not my job. I'm not an in the weeds player. If I don't understand it, I can't invest in it.
Do you need to be an expert in it, or you just need to know enough to form a thesis?
You can form a thesis, but there are questions about Axie that need to be answered about. Is it essentially a Ponzi scheme? Not in a malicious way, but because it needs endless new flows of capital in. I think I'm not qualified to make a meaningful investment. Could I have it as a basket in my basket? Of course, because that's me saying I don't know. Mm-hmm. But I'm not going to take concentrated positions in stuff that I don't know inside and out. And that's really how I've approached it. It's like, macro people should not be stock pickers. They sometimes are when the thesis aligns, like social tokens. I don't mind doing that. But generally speaking, I'm wary of doing it. There are other people like the guys at Delphi Digital, who was the leading research shop.
Sure.
They will go right down the weeds, understand every single thing about the token economics, the users, the participation, the community, who's building on what, the Discord channels, and then they'll make a decision. Good on them. I can't do that.
I think you said all bad investments that lost money pale in comparison to inadequate position sizing on the good investments. We all feel that way looking back.
Position sizing is the hardest thing in the entire investing world.
For sure.
Because you always got too big a position when it goes wrong and too small a position when it goes right. And you struggle with those demons all day, every day.
Is Sam Bankman-Fried, the founder of FTX, the next Bill Gates of crypto?
Quite possibly.
I'm in camp. The answer is yes.
Yeah, I mean, he's a genius. What he's building is amazing. He has a big strategic vision and is executing it super fast. To be fair, CZ has done the same at Binance.
Sure,
those
of course.
Those
Great.
two are the two that have really blistered a trail, unlike Coinbase, which is good, but it's just not the same kind of relentless pace that both CZ and Sam are at. Now, Binance is a very different organization to FTX. I mean, I like FTX. I own the token as well. I just think it's very good.
I mean, a related question, you look back 20 years in the top 10 companies, only one, Microsoft, is still in the top 10. One with Facebook, now Meta, I believe Zuckerberg was a senior in high school. So amazing how much has changed in 20 years. I'm not even going to go 20 years. I'm going to go 10 years out. There'll probably be a reshuffling of the top 10. Do you think it's possible that Binance, Coinbase, FTX could be a top 10 company?
No, because they're exchanges. Exchanges by definition can't be. It has to be a platform. Because platforms are what generate real network effects. So what they're seeing is they are riding the growth of crypto. Yes, Citibank for a while was in the largest companies in America in the early 2000s. It's pretty rare that a middleman is, but a platform, that's where that's where the real value accrues.
If you had to pick one from a market cap perspective in relatively short, only 5 years, Bitcoin, Ethereum, or Solana, who has the highest market cap in 5 years?
Ethereum.
And at 10 years, you would feel the same?
Don't know. Less visibility, right? We just don't know what the world looks like. Could be ICP. We honestly don't know. And I think we'd be foolish to make that guess. But over 5 years, it's pretty difficult to see the gap between Solana or whichever one it is and Ethereum entirely diminish. I do think Ethereum dominance, like Bitcoin dominance, will go down over time. And that's fine.
Right. We mentioned a little bit some sub-asset classes within crypto earlier, a little bit about memes. We didn't dive too deeply into GameFi, but I guess we did with Axie Infinity. That appears to be something that could really explode upwards, but be incredibly volatile. Have you done any significant diligence on other than Axie in the world of GameFi, or it just makes up a tiny part of your more broad basket?
It's a tiny part because the reality is the gaming world. I mean, I just got off a call with people who are building, something mind-blowing. And it's in 4K using the Unreal Engine with NFTs and with social tokens as economies within the game and all of this stuff. Nobody's built any of this stuff yet. So all of this stuff is really basic 1.0 stuff. So the real stuff, how long does it take to develop a giant game? 3 to 5 years. So my guess is we'll be talking about this in 2025, and we'll start to see these huge gaming economies grow up where people can earn universal basic income, have some universal basic equity. It gives them an ability to opt out of the current system where their livelihood is under pressure. There's all of this is coming, but again, most people can't see it yet, and all they can see is Ready Player One and dystopian future owned
Right.
by one firm, and we're all going to be crushed by the machine. I mean, it's like, no, it's an arms race of millions of people building up millions of experiences, and the metaverse is a digital fluid state of which we operate and pass through. And whether we're earning money in a game by playing parts of the community that drives value, or we're working from Facebook's metaverse, they're all going to exist together, and we'll all be able to move around between them.
Another sub-asset class, I indirectly, very briefly brought it up earlier. We got to be a little careful to be G-rated here, and that is not safe for work tokens. There's a lot of potential in that. Again, is that something that you feel you've done enough diligence on, or may you only indirectly in a tiny basket hold some?
I don't hold any at all.
Okay.
It's not a part of the market. I have stopped adding to the speculative part of the portfolio that I've got. So I'm just holding it through and waiting for broader retail participation. A lot of the speculative stuff I won't hold for a long time, but some of it I'll get to understand. So I'm in very much I've got my position on, I've added some options for upside leverage on top. I'm just going to sit with it now. So as new things come, I'm just observing stuff, but not getting involved unless it's really, really compelling to me.
I'm assuming the biggest risk broadly to crypto and digital assets is basically going to be our political system, or more specifically, the regulators. I know you're not a US citizen, but I'm looking at it from the US's perspective. If they mess this up, and they might, I don't know if there's a strong number two to step up. Countries like Portugal and El Salvador are going to be too small. China, thank God, messed up the opportunity of getting that right. I've been optimistic for years, but they keep stumbling on crypto. But if I had to be a bull looking 20 years out, I am fascinated by India.
I agree. They keep getting in their own way.
Right.
And that's the story. I'm half Indian. That is the story of India. It gets in its own way. But, the Indian economy is an incredibly powerful beast because it's coming from a low base, and then they're layering on technology. They've got the largest mobile phone usage in the world, the largest data per capita in mobile phone usage in the world, 3G, 4G, 5G. They've then got Reliance Technologies that's basically owns all of this infrastructure. And, I was listening to Mukesh Ambani, the founder of Reliance, and he's talking about the metaverse as well. I mean, these people get it. Now, he's a very powerful man. In the end, India is full of young engineers who want, engineers, maths people, perfect people for crypto, who want to make money and want to participate in the global economy. They'd be stupid to sacrifice all of the potential to stop capital flight. They need to make India attractive, then capital flight goes. And they can do it because, the Indian economy is not, the average age is like 28 years old.
Right.
Unlimited people, 28 years old, and a technological revolution going on there. What's there not to love?
Yeah, they may get in their own way like maybe we do, and they have more potential given the volume of people there, the technical proficiency, and the youth, as you mentioned. Related somewhat to that and the earlier demographics and political discussion, we do have, and I don't even know if he's a Republican or Democrat, I don't care. We appear to have an amazing politician here in the US. Shocking, there may be one or two. Mayor Suarez in Miami. What he's done with Miami, making it a hub, what he's done with Miami Coin, I'm very fascinated by that. I know you're not a US citizen, but is that something that you've watched in him specifically?
Yeah, I mean, I actually own a property in Miami. But yes, I've spoken to Mayor Suarez on Real Vision. It's very interesting. It's very clever what he's done. I mean, he saw the gap in the technology companies and the crypto crowd not being treated well in San Francisco and elsewhere, and gave them a home. And then said, not only will give you a home, we'll become active network participants, right? He's building a community. Very cleverly done. And it's exciting. Problem is the bloody US operates at these kind of city level, state level. God, it's just the layers of everybody's self-interest that you can't, I just got off a call with somebody else in the US political system about how they're going to try and change this. But the problem is the politicians are being fed lies by the banking incumbents and the regulators, because the regulators want power. I mean, it's just a mess. And you don't have a leader yet, a true leader who wants to take this on like he did.
Yeah, we have some comments coming into the comment box. I guess not everyone is necessarily a fan, perhaps, of some of our opinion, and that's fine. We want to hear varying opinions. I hope to get a chance to get to some of those questions, by the way, but we're going to be a little bit tight on time. Let's see how we could do it a little bit of rapid fire. Raoul, what would cause you, it's probably hardcore regulation, but what would cause you to change your mind on crypto and digital assets?
A significant slowdown in network adoption. Because if that's the pricing model, then we live and die by that. If we're saying the network die, then the network's not less valuable. Simple as that. Now, we can have slowdowns in network growth, but if it kind of breaks out of the logarithmic trend, then you've got an issue.
What makes a great trader?
Somebody whose time horizon matches their investment horizon, their idea horizon. And that's a really important point.
In 5 years, not 10, I'm sticking to the 5 years, complete the top 5 that you would say for a blue chip. And I'll start with the first one, make it easy for you. Of course, Ethereum. What other 4 do you think could be anchors in a portfolio?
Tokens, we're talking.
Yes, tokens.
I think Solana continues to do well. I think Terra probably is interesting. I think those layer ones. And then you probably have to take one of the DeFi protocols. Which one? I don't know. But let's call it Aave. Could be, or Uniswap. Uniswap, that's probably a good one. And then maybe take a wild card. Let's take ICP.
Okay, all right.
That's not my bet. I don't own any, but I'd like to have a wild card that could do,
very well.
Yeah.
Right up my alley with family offices. And again, the more I talk about crypto and digital, actually, the more in trouble I get, especially with non-family member, somewhat older CIOs. They don't want to rock the boat. The system has worked for the family and for them. They want to just keep pace with inflation. Now, I tell them inflation ain't no 6-7% for a family like yours that you're representing, and maybe 20, 30, 40%, especially if they want to buy more assets going up. I'm like, you're hurting the family's purchasing power over years. And a lot of them are like, yeah, they're not going to notice that in 3 to 5 years and I'll be out. It's very self-serving, unfortunately. There's not a great alignment with a lot of CIOs directly with the family. And the lack of really deep knowledge in crypto and digital is startling. It's shocking. What do you think is going to happen to executives that have that approach looking 5 years out? Are family offices, I know this is more up my alley, but are they going to potentially look completely different in 5 or 10 years?
Well, most of my client base for Global Macro Investors, family offices, I think that, look, they adapt. 20 years ago, none of them owned technology, except a few. Look how long it took Warren Buffett to buy technology stocks. But he did. So it's normal. There's always got to be a last entrant and an early entrant. And that's fine. That's a function of risk. Now, can you afford not to? That's a different question.
Right. What's your take on music NFTs, for instance, like the Audius token?
Again, I think it's difficult to drive people onto a platform. I think they're interesting. I think music is clearly going to get tokenized in a number of different ways, from the communities to the IP to integration of NFTs to ticketing to everything. I'm not sure yet that platforms like that, these remind me very much of the 2000.com. Not that there's anything wrong with Audius, but it's really hard to get network adoption. It's really hard to get people to go onto yet another platform. It can happen, but it has to be something that's just different to, oh, it's just another way of doing things, but here the artists get paid. It's just not going to drive people. I mean, are you listening to music on Audius? No, you listen to Spotify. Why? Because the friction is now so low for you to do so, or Apple Music. This is the issue.
Back to digital art a little bit. Are CryptoPunks and Bored Ape Yacht Clubs the new Picassos or tulips?
Neither. They are the new memberships of the golf club.
Yeah, that's a good one. That's good. Everyone is looking for the blow off to end this cycle. Is it possible? I'm thinking back to October when Shiba Inu and Sandbox that you mentioned did so well. Was that maybe the top of the cycle?
I don't think so. It's possible. I don't think so. Because I know how much institutional participation is still to come and hedge fund participation. So I don't see it being the top of the cycle. I think that what we saw was interesting because we didn't really break above highs properly a month ago. We didn't get the retail going, I've got to get in because it was headlines, crypto makes new highs, goes up another 50% this month. We didn't get that. Sure, we got some in March, but that's pretty normal at that stage in the cycle. Feels like the cycles are elongating.
And two final questions. Looking ahead into 2022, and I don't know if we're still going to follow that 400 days before the Bitcoin halving cycle, things really, really go down. Maybe we do, maybe we don't. But how would you look at, as far as you could look ahead with your charts and what you follow, could we have a great bull run in the first quarter, but we're inevitably going to have more bear and volatility? Or could we hit a hardcore winter where things go down and stay down?
Yes, is the answer to all your questions.
I guess it's going to be a fun year next year.
I think we'll have, it could be either. I don't know. I'm no guru. My best guess is institutional participation drives and hedge fund participation in the first quarter drives retail participation, which drives a final stage bull market, of which ends when ETH 2.0 is launched, which I think is like by the summer. Could I be wildly wrong? Yes. But if my view is another 5 years, then I'm just basically watching it. Sure, if it goes up, if crypto goes up 5x from here, will I top slice some and pay for the big extension on my house I'm doing and stuff? Yeah, sure. But is that going to drive me out of the space? No.
And the opposite, if we do hit, things go down 50 or 70%, and they stay down week after week after week after week, you're going to re-examine your thesis, I'm sure. But I'm assuming you're going to say, let it stay down a year. I may not like it, but if my thesis is still strong, I'm looking at an even better and bigger bounce back.
And if it stays within the log channel, let's call it the weekly or monthly log chart channel, like Amazon has and Facebook has in their entire history,
right? Then
there is nothing wrong. It is just part of the natural order of volatility of a network model stock.
And my last question, Raoul, is our audience is hearing us. A lot of them are, relatively newer to being more aggressive and active in the digital asset space. And this is complicated. You could spend, like I do, 6 to 8 hours a day. It's not enough. You could learn how to use MetaMask, Uniswap, and all that. It's still, you're not going to have the time. There's been a lack of really high quality fund of funds in the community. You're a trusted name, obviously have a wonderful team. You're building something of the fund of funds I think my audience would benefit from learning more about, if you don't mind.
Yeah, so my Global Macro Investor is my 17-year-old research service, and it's read by, the world's biggest hedge funds, family offices, sovereign wealth funds. And I was sitting to think, what am I going to do with my crypto? Because it's becoming too hard. You and I talked about 40 tokens. We can't get to the bottom of what they're all about. What's good, what's bad. It's so complicated, so fast moving. I'm like, okay, I need to rent expertise. So I'm just going to give it to a hedge fund. And then I'm like, yeah, but I don't want to have one hedge fund because what happens if wallets get hacked or whatever? So I'm like, we need a fund of funds. So I thought, sure, let's see what fund of funds there are. Virtually nothing. I'm like, oh, interesting. So then I wrote to my global macro investor subscribers and said, listen, somebody needs to set up a bloody fund of funds. And one of my longstanding clients said, well, you can do it and I'll be a COO, because he was ex-Soros fund management, ex-Soros spinoff, a CPA, a lawyer, 30 years in the hedge fund industry. So then we just, again, put a thesis together, went to global macro investor clients, said, listen, let me know if you're interested. We raised 100 million in 2 weeks. Just from my clients. And then, we've now got distributors, there's all sorts going on. And really the thesis is the space is going up 100x. We need to remain in the trade and give money to experts to manage over time so we can capture the alpha in the space. There's only $1 billion of primary capital in the hedge fund space versus, I don't know how much is in VC space now, but VC space trades a huge premium. So think of ICP pre-sale, it plummets 95%. That's the difference in the secondary market and the initial market. So the alpha in this hedge fund space is gigantic. I mean, I've never seen anything like this, and it's not going away because there's not enough capital coming into the space to arbitrage away the alpha. So it's a huge opportunity. We can diversify amongst a bunch of different funds, different strategies, asset allocate. So we can buy NFTs when they've blown up, and we can look at distressed managers. You can pick these things up, all sorts of stuff. So it's a really interesting thing. So it's called XPAM, Exponential Age Asset Management. So if anybody wants to go look at the website, EXPAAM, Exponential Age Asset Management.
Highly recommended, that's for sure. And Raoul, for the 1 or 2 people in the world that don't yet follow you on Twitter, what's your Twitter handle again?
At Raoul, RAOULGMI.
Highly recommended. Certainly, you have to follow. I also recommend certainly just go and pay the money and subscribe to Real Vision. I mean, really, you're letting a couple of hundred or thousands of dollars, and that kind of applies to my membership as well, get in the way of what could be the greatest asymmetrical opportunities you're ever going to see in your lifetime, and putting the right information at your fingertips. You're just like, I don't like.
Well,
I
even
don't
easier, Real Vision Crypto's free.
Yeah, that's right.
Email
too.
address, realvisioncrypto.com is free, and it's the best single educational source of what's going on in all of this space you can ever find.
I'd like to give you a run for that one day, Raoul, but maybe in my family office world only. It's been great really having Raoul Pal on. I'm the biggest fan. I love to follow his stuff. As you noted, you probably heard my enthusiasm, and I had a lot of questions. I'm glad we're somewhat on the same page. You're the only one who's agreed with me. That means we're both in trouble, Raoul, with the potential of ICP looking a couple of years out. The potential, we shall see. I'm going to do my close now. I'll keep it quick. It's been great to have Raoul on. Everyone, I'm Angelo Robles. I'm the host of the Angelo Robles podcast. We're a family office on YouTube. Go and subscribe. In about 1 more week, we will pop this video up on YouTube. So if you're watching it on YouTube, it's obviously already up, but I'm noting that to our live audience. As I noted before, I'm actually very active on Instagram. Angelo Robles Meta, META. I mentioned Family Office on YouTube. I'm active really on all platforms, including Twitter and LinkedIn. And my organization is FamilyOfficeAssociation.com. We're among the world's largest global membership companies, organizations dedicated to single family offices on content, research, digital, and in-person events. I just did 2 weeks ago, a full week of 8 events at Art Basel, Miami. Yes, a lot of it was crypto and digital centric, but not all of it. And a lot of it was social interaction, which a lot of great investors and families enjoy. So check us out, maybe become a member. It's up to you. That's FamilyOfficeAssociation.com. Thank you all today, our live audience, those that will inevitably watch this or hear this. And again, a special thanks to Raoul Pal. Raoul, keep up the amazing work. I learned so much. Thank you.
Thank you so much, as ever.
Pleasure.